We're back near the session highs, and again, I'm going to say I think that the market's telling you that it's not that concerned. If it happens tonight, the way they say it's going to happen, it's something we've been talking about for months. If it's more than what we expect, if it's more than 34 billion, that'll be a different story. But if it isn't, the market seems to be telling you it's not that concerned at the moment.
You know what's not priced in, Rob Morgan? I don't think. Maybe you agree or disagree. Tell me. I don't think it's priced in. What if, when all is said and done, we actually have fewer tariffs in the world?
Well, that's certainly a risk, Michelle. I think that I would agree with Kenny
that would be a positive.
Yeah, well,
that would
absolutely. Yeah, that's right. That would absolutely. But I agree with Kenny though that I think the market has it baked in that this negative is going to happen. And we've been advising clients to take out some trade war insurance here, lighten their holdings of big cap multinational stocks, which have been hurt most of the year with this baked in thought that we're going to have a trade war. Continue to add to small cap growth stocks, which tend to be domestic. But yeah, certainly it would be completely unexpected if we have fewer tariffs in the world, and then that strategy we've advised would not be the greatest. But it's a risk. You got to manage risk here, and what Kenny said earlier, and what I agree with, is that the risk certainly right now is more tariffs. But it'd be great to see less tariffs.
Rick, we had ADP this morning, a little soft ISM as well, a bit stronger than expected, which has had a bigger effect on bond markets.
You know, I don't think really either of them did. And yes, even though the ISM on first blush definitely was softer than expectations, we gained on the revision. It was virtually a wash. The non-manufacturing ISM was very solid. It was second only to January's read, and January read comped back to the highest level since 20 years. That's how far back my database goes. We don't see the long end respond to that. As a matter of fact, as you look up at the board, it's really kind of shocking. We're at 256 in a 2-year. Its highest yield close going all the way back to 2008 was 258. We're 2 basis points away. Then you look at 30-year bonds, they're -1. You look at 10-year notes, they're unchanged. Every possible combination of the curve is flattening to 2007 comps. 10s -2s, 30s -5s, 30s -10s. So I guess the real story is that if the Fed decides that they're going to have another 25 basis point increase, the way things are set up now, I would be shocked if there weren't inversions on the curve. So I'm not sure what's in Jay Powell's mind. It doesn't seem to be really a data thing domestically. I think it's more of a data hiccup globally on growth on the long end. Also, I love that Wall Street Journal story. We all think all the turnstiles of buying on long maturities are closing down. You know, more supply, we're going to see 3.5%. But when you look at 30-year bond and to some extent 10 years, these long securities have a big market in terms of liability asset matching by things like entities like pension funds. And don't dismiss how much that buying throws in.
Rick, thanks. Hold on a second. I want to get Kenny in. Kenny, he's saying that the bond curve, that the yield curve could invert. Are you worried about that?
Well, I think you have to worry about it inverting, although I'm not sure we're going to get the inversion, although we've been talking about it now for months and everyone is worried, and it's a precursor to a recession, so it's a precursor to an economic slowdown. I hear you, and I think you have to be worried about it considering what's happening with rates and what, that they're not moving the way that they should. So I think there's certainly some truth to it, and there is some concern to it, but I don't see it yet.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.